Hey everyone, welcome back. Now we're going to talk about Elliott waves and Elliott analysis. Again, it's an area where typically you can expect between 5 to 10 questions in an exam. So we'll make sure that we cover off what are the most important points, but also trying to fill in a little bit of information that's beneficial to know as well. So let's just jump in and let's have a look at this. So developed in the 1930s, R.N. Elliott, he observed the patterns or the wave patterns and started to theorize on this. His book was called Natural Law back then. Great read actually, so definitely something which is of interest. There are 8 waves in a cycle. Now, wherever in my notes here that you've seen me bold something, make sure you memorize that because it is something that we've seen questions on in the past. It basically, the most simple, basic Elliott pattern is made up of this impulse wave or this motive wave, which has got 5 subwaves that are part of it. And you see that leading. Let's get the pointer across. So we take these 5 waves going up, 1, 2, 3, 4, 5, and that are the 5 subwaves of our motive wave going up. And then we have our corrective wave. And typically, in the typical idealized Elliott wave, that's 3 waves going down and labeled A, B, C. So all the motive waves are usually numbered, and all the corrective waves are usually lettered or noted by letters. And so these are the things that, you do need to memorize this. Elliott was pretty much forgotten about, really didn't see much written about that until in 1978. We had A.J. Frost and Robert Prechter, who's actually a CMT as well. He basically wrote the book Elliott Wave Principle, which has become almost like the standard on Elliott analysis. Their work has been extended by Jeff Kennedy. If you really want to get into this, Jeff Kennedy's book is probably the best that I've ever read on this, put out by Bloomberg Press just in the last few years. Really great book. Another one, Connie Brown, has a couple of books on Elliott analysis. She defines a way of identifying where we are in Elliott wave. Again, fantastic books on this topic. This type of analysis really is very subjective. You'll see as we go through, it can be really difficult to label a chart based on Elliott principles. That's no good if you are a portfolio manager and you've got hundreds and hundreds of charts that you're going through and analysing. Trying to do that subjective analysis is very difficult. But if you're trading a futures or a commodity, or there's just one security that you're trading, this can be really beneficial. Getting in there, doing the analysis, understanding how this market moves, and working with it, fantastic. So definitely worth having a look at. Now, in their text, they outlined a naming standard, which is basically illustrated here. Typically, when we start any chart and we do our first analysis, we're usually looking at the primary and the intermediate. So again, from a Dow perspective, remember that we had primary, secondary, and minor or short term. Same thing here. In this case, in Elliott, we have primary, intermediate, and minor. And then we get these minutiae and the grand cycles as well. So there's a few rules that we have to abide by with Elliott waves. Now, the first one there, wave 2 cannot retrace past the start of wave 1. If it does, your count is completely wrong. You have to memorize these rules. You do have to know these because there will be questions on them. So you see that here, hang on, looking at the wrong screen. Wave 2 here, you can see it retraced past there, so this one is invalidated. Wave 3, it can't be the shortest motive wave. So out of the motive waves here, we've got wave 1, wave 3, and wave 5. Out of those 3 waves, wave 3 cannot be the shortest. If it is, your count's wrong. The other one is that wave 4 cannot retrace into the territory of wave 1. And so, if that's happening, then again, it's an incorrect count, and that can't be allowed. So all of those 3 cases are incorrect. And if the rules are broken, then you've got to look at that and say, okay, well, what other numbering can I see that makes sense? So if you look at this chart down here, we have this situation where wave 3 was the shortest. Clearly, that's not allowed. So if we use that same pattern, what we can look at then is say, well, okay, maybe this is the one of the next order up, and then wave 2. And instead of calling this 3, well, I'm going to call that a subwave 1, 2 and 3, and look for wave 4 and 5 to confirm that as well. This is what's hard about Elliott. Fortunately for the exam, you're not going to be presented with data. You don't have to then come up with counts. We used to have to do that in CMT3, but not anymore. So you're let off the hook with that one, but you do need to understand these rules. You do need to understand what these rules are and memorize them, because there will be questions on them. Motive waves. So as we're going through, motive waves always go in the direction of the trend. So that's in the numbered waves there. There's 2 types of motive waves. There's an impulse wave and there's a diagonal wave. So an impulse is always, the strongest waves. Wave 3 is always an impulse wave. It can't be a diagonal, but you can have starting diagonals and you can have ending diagonals. These are just complex waves that are, that they just don't fit the nice clean run up as we would hope to have with a motive wave. So a couple of rules here. So you can see here that we've got an ending diagonal here. So we've had nice wave 1, retrace wave 2, and we've had a nice impulse wave for 3, then we get 4, and then we get this complex, messy wave at the end. It's continuing to go up, but it's complex. Now, we're going to talk a little bit later about triangles, and even myself this morning, I was looking at these saying, how do I tell the difference between a diagonal, an ending diagonal, and a triangle, or a triangular correction? The big difference is that you've got to look at these. Remember when we did bar chart patterns, we talked about the wedge? And it was different from triangles because both lines were going in the same direction. Whereas in a triangle, one's usually flat or they're symmetrical, but they're going in different directions. Same thing here. With an ending diagonal, both lines are going to be going in the same direction. And you'll see that when you refer to the notes and look at the symmetrical triangles later, that's how you tell the difference between the two. So a couple of things here, make sure I get through these notes here. Wave 3 is always the strongest. Diagonals do ignore rule 3. Remember before we had, hang on, let me jump back to rule 3 here, that wave 4, unfortunately diagonals break that rule where wave 4 can't enter into the territory. So you can see here on this little example that we have in this diagonal, we've got 1, 2, 3, it's getting smaller and smaller. Wave 4 is entering into the territory of wave 1. So that's probably one of the hardest things about Elliott, is that we set these rules and then it's like, oh, but if this happens, then we do this and we call it that. Look, that is part of the difficulty. Just remember the clear rules on this. Remember how to identify these patterns, and you'll be fine for the exam. As I said here, it's like a wedge where both lines are either rising or falling. Ending diagonal is what we've shown here. You can have a starting diagonal as well. That's a market that is really unsure at the start, and then finally we get the thrust out of that. So you can see them. Extensions, another one here. So when we have the waves, the market doesn't always move in nice, clear 5-wave move up. Sometimes there's more. And so there's these extra rules that were created around that. So what we have there in an impulse wave going up, the motive waves, usually there's one of them. It's usually either 3 or 5 that are going to be extended. And basically an extended wave, it's a elongated impulse wave. And what makes it hard is that wave's subwaves are just as big. So Elliott is very fractal in the way it works, where you have a wave and then you have subwaves inside that and you're expecting to see similar patterns. It becomes really hard to identify. So if you have a look at these examples here, you can see that we've got the waves going up. In this case, we've got what we would call a first wave extension. It can be really difficult to identify this. If you really do want to get into Elliott, the key is to always look for wave 3. In that sequence, you're looking for what is the biggest single wave that I can see. Gaps are a fantastic way of identifying. Typically, we talked about measuring gaps before. You are going to see that gap in wave 3. The biggest impulse move is what you want to look for, and then try and work out where does everything else fit around that. So in this case, we've got the 1, 2, 3, 4, 5, and wave 1 here was an extended wave 1. Then we get the third wave extension. Again, this is a case where we're looking at that data and we're saying, I don't see a really clear wave 3. Well, then step back a little bit. And a great way of actually doing this is even changing timeframes. You look at that section of data and you say on a daily basis, just too hard to see, let me step back on the weekly, and maybe it becomes clearer by doing that. I often use swing chart overlays to help me identify. So, put on either a Gann swing chart overlay or a 0% swing chart overlay. And that really helps identify the swings that are going on and can really help identify where these may be as well. Here's the case of a fifth wave extension. Again, very clear 3 in that case. And then you get these cases here where it's just really not clear. There's just nothing to work from. Hopefully you don't see that. Look, you're not going to get questions on this. I can't see that they're going to examine this. They're more looking for your understanding of the motive waves, the 2 types, impulse, diagonal, the corrective waves, the 3 types that we're about to go over. Understanding this idea of ending diagonals, starting diagonals, and understanding that an extension, an extension can only happen in a motive wave. We don't get it in corrective waves. Continuing on, wave 3 extensions are the most common. You're going to see some retracements and going on. It's not as clean as the other ones. If a wave is extended, then usually the other 2 waves will be around the same size. So that's a rule to remember. And then if wave 5 is extended, expect a sharp reaction, a sharp correction out of that wave. It's almost like in Dow theory where we talked about the end of the market, where the primary trend is about to change. Same sort of thing happening here. You get that extended move and wave 5's pushed up by all this new volume coming in, then the reaction out of that's going to be pretty big. Another concept for motive waves is the idea of truncation. Again, we've seen questions on this in the past. So when you have an impulse wave, in an impulse wave, if wave 5 fails to take out the end of wave 3, then we call it truncated. So we get this situation where it goes up, wave 3 was really clear, we get our corrective wave, wave 4 out of that, and then wave 5 happens, but it doesn't create a new high. That's fine. It still falls within the range of the Elliott definition, still has the 5-wave substructure that we would expect to see in there, but it just didn't make it out. And it really is a sign of exhaustion. That the market's just gotten too tired, can't make it out, the bears are selling it down, and then we're expecting some sort of reaction. Typically this happens after wave 3 was really strong, so you can get truncation as well. So that's the motive waves. Now we've got the corrective waves, which are even more confusing. It's just that there's a few more different considerations in our corrective waves that we have. There are 3 basic patterns that you have to remember. There's the zigzag, the flat, and the triangle. And then the other ones here, the 3-3 and the 3-3, we'll talk about there, putting these things together as well. Corrective waves are either sharp or sideways, so we're expecting a sharp drop or a sideways grind out. And again, under low volume. Remember we talked about this in Dow, that the secondary or the corrective trends typically had low volume. That's what we see here. You know, when you've got volumes dropping, there's moves up and down, but it's really not going anywhere. And they're typically the corrective waves. There is a rule that you need to know. Alternation is what it's called. So in a motive wave where you've got 1, 2, 3, 4, 5, what we say is that with wave 2 and 4, when we're comparing those corrective waves in the move up, if 2 is complex, then we expect wave 4 to be simple. If 2 is simple, then we expect wave 4 to be complex. That's the rule of alternation that you need to know about as well. So let's have a look at some of these corrective waves. The first one is a zigzag. Now again, see it in bold there, you must remember this. A zigzag wave, a zigzag corrective wave, is made up of a 5-3-5 pattern. Now what I mean by that is that the first leg of the zigzag coming down here to A, remember we said they're always labelled in A, B and C. But what's happened here is that we have this corrective wave, but the corrective wave is made up internally by an impulse down, a small correction back up going to B, and then another impulse down to C. So you've got to remember that. And of course they're numbered, the impulse waves are numbered. So we've got our 5 coming down here. We've got our this is actually bad. This should have been A, B, C going up in here. I'll have to update that image in the notes. But you have that corrective wave there, and then we have again another impulse wave back down into C. So that's a zigzag. Typically what you're looking for, B is not taking out the start of A, and C is extending beyond the end. That's what we would call a regular zigzag, and there's some variations which we'll talk about later there as well. All right, the next corrective pattern is what we call a flat. It's a sideways market that's just not going anywhere. And you can see the examples there. You know, a regular flat is very much like a rectangle where we've got A, B, C going on here. Again, one of the key points to differentiate between a zigzag and a flat are the subwaves, where before we had 5-3-5. In this case, what we've got is 3-3-5. So again, make sure you memorize that, because there's always questions about this sort of stuff in the exams. But that's how you know that you're looking at a flat and not a zigzag. The regular flats, B comes back to the start of A, and C goes back to the end of A or the start of B. Then you've got this idea of an expanded flat, where B actually takes out the end of wave 5 or the beginning of wave A, and C takes out the end of wave A or the beginning of wave B. So that's an expanded, like an expanded triangle or broadening pattern where it's widening up as well. And then we have what we call our running flat. Now it starts off, you know, we have wave 5 here, we come down to A, we then have B, which takes out wave 5, and then we start having C, so it looks like it could be an expanded flat, comes down, and C fails to take out A. And that's the big differentiator between an expanded flat and a running flat, is where C ends up. And I know that there's been questions in the past on this as well. Wave A is always corrective wave, and then wave C is always a motive wave. Remember, that's the substructure. You know, corrective waves are usually three subwaves, where a motive wave is made up of 5 subwaves. And so that's why we're talking about that there. We've got these rules. waves A and B are never triangles, and we talk about triangles in a minute, and rarely are flats. They're usually typical corrective waves, zigzag waves is what they're made up of. And then wave B usually retraces 90% of wave A, at least. So if we take this regular, just saying as long as we get within 90%, then yep, that makes sense that we're in a flat rather than looking at some sort of zigzag. All right, triangles are the other one. So we've got a table there of the different triangles that we have that you can look at. Now these ones here, remember this, their subwaves are all corrective waves. They're all threes. So when you get a 3 and then a 3 and then a 3 and a 3, there's typically 5. Well, it has to be at least 5 actually for a triangle. They are made up of these 3 subwaves. Now remember before when we were talking about ending diagonals in the motive waves, that I was saying that we had the 2 waves going up for ending wave 5 diagonal. Well, when you look at these charts, you can see that difference where none of these cases of the triangle have the waves going up together. They're always different. They're either one's horizontal and one's down, or horizontal and one's up, or they're both symmetrical like that. Got to keep that in mind, because I've seen questions, and I think that you're going to see them in the quiz, where there is just a picture of the ending diagonal, and it's made up of, both of them are made up of corrective subwaves, and so it's 3, 3, 3, 3, 3, and you're looking at that saying, well, which one is it? The angles of the lines will tell you whether it's an ending diagonal or whether it's a triangle. So always a sideways corrective wave, 5 subwaves labelled A to E. Almost all subwaves are zigzags, just that 3 pattern there. If you were to dig in, it would be a 5, 3, 5 within that, each of those subwaves. Only one wave could be complex. That's definitely a rule there. Sometimes you can get ascending and descending here. They're sometimes called barrier triangles as well. And a triangle always precedes the final motive wave at the next higher level. Again, that's that fractal thing. I really don't think you're going to get asked questions about that. When you get these really complex corrections, which can happen where it can grind on and on and on, then what we call that is either, there's a combination which we'll talk about, and then the example here of a double and triple zigzag. So in this case, what we've got is a zigzag, which is made up of your typical 5, 3, 5 pattern. Then we have a 3 pattern, which follows by another zigzag. So let's just have a look at that quickly here. So we've got our first zigzag coming down here to W, which is an ABC. So when you get an ABC and then you get a move up, but it's really not a wave 1 and C's taken out, then you can say, hang on, we're probably looking at a double zigzag here. And so what we do is we label that W, we label the end of the reaction X, and then we have, again, another zigzag coming down, which is a Y. Now you can have a triple zigzag, where again we have that same sort of pattern. Imagine that this same pattern was added to the end. It would go to an X again. So over here we would have an X again, and then it would come down to Z or Z, depending on where you speak English from. And that becomes the triple zigzag. The 3 in the middle is basically, we say it can be in any 3. So it's any type of 3 pattern, be it a flat, be it a triangle, or be it a zigzag as it is in this case. So just you can have anything joining the zigzags in between. So again, combination variant of that, where it's not just zigzags, but you can see how this works. We've got the zigzag here at the bottom. And then we have any 3. In this case, it is a zigzag, that's the 3. And then we have a flat, and then we have any 3 again, and then we have a triangle. And so that's what you can see. That's what happens typically only in corrective waves. but you do need to understand this combination issue that goes on there. Each corrective structure is joined by an X wave and has these characteristics. It can be any corrective pattern, usually a zigzag, never more than one triangle there, although the triangles usually you will see at the end. And again, when you come back to our bar pattern work that we did, it's really where we've been in that sideways market. We're getting that contraction where the buyers and the sellers are just sitting there waiting for the breakout, which will start the next move. All right, now Fibonacci. So a lot of the rules around Elliott and the positioning comes back to Fibonacci principles. Fibonacci is something that you'll see all through nature. Mathematician, I think we've already talked about him from the early 1300s or 13th century, developed this idea or discovered this idea of the golden ratio, which you'll see in nature over and over again in all sorts of things. Out of that ratio came the Fibonacci sequence, which you see a little bit of it there. Now Fibonacci is used a lot in these waves in identifying where possible targets can be and for verifying that the Elliott structure is correct. So we have, well again this is still talking about the ratio, so let's go into our retracements here. So wave 2s usually make a deep retracement of wave 1. It's usually 0.618. Where we're seeing that ratio go there. Wave 4s usually make shallower retracements near 0.382, leaving 0.618 on the other side there. So these are things that we can watch. They help with the identification, because if you're trying to label something a wave 2 and it's only made a very small retracement, probably not a wave 2. And so, as I said, that just helps there. Retracements and corrective waves. So again, these are what have been observed. Typically, when you look at wave A, how far does wave B retrace gives you an idea of what type of pattern we're looking at. So if it's a zigzag, we're running between 50 to 80%. Triangles are 38 to 50%. That's wave B. If wave B is in there, then it looks like we're running a triangle there. Running triangles 10 to 40, flats, combinations, etc. So you can see those numbers there. Impulse waves. When we talk about impulse waves, we look at wave relationships and the multiples, and we multiply that factor into those waves. So when we look at wave 5 will often be 0.618 or 0.382, the net distance travelled from wave 1 to wave 3. So let's just have a look at that on this chart here. So if we take the start of this move, and you can see how I've labelled this 1, 2, we've got a big wave 3 here with some subwaves inside it, coming down to wave 4. What we're doing is we're taking the start of wave 1 down here, all the way up to the end of wave 3, and we're using a tool here which we've called Fibonacci extension. So I select those 2 points, select the next point, the end of wave 4, which is the start of wave 5, and say, right, well I want 0.382 or 38.2% of that move to be marked on the chart. And that gets marked here in red, and you can see that wave 5 pretty much hit that exactly. And I think what we're running out from that is an expanded flat coming in there. Still not sure, that's where the numbering can get really interesting looking at that. We definitely some sort of corrective pattern down to there. May ignore this long spike down and sort of look at it and say, well, okay, this could be an A, B, C, a typical zigzag coming out of that. But have to have a closer look. I didn't look at those numbers. Couple other rules. When wave 3 is extended, it's the much bigger compared to wave 5 and wave 1. We expect 1 and 5 to be equal, or at least wave 5 to be 0.68 of wave 1. And so there's a couple of targets. I was talking to a guy who trades Elliott a lot, and he actually said that wave 5 was the wave that he would trade more often, because by that stage you've had wave 3, wave 4's been established, you know your targets, and it's probably one of the safest trades to make from an Elliott basis. Most people try and find wave 3, but once you've only got 1 and 2, trying to identify 3 that early is really difficult, and that's why they would trade wave 5. If wave 5 is extended, you can expect it to travel 1.618 times the distance from wave 1 to 3. So again, you know, it's just looking at that and having multiple targets there for wave 5. When wave 1 is extended, we can expect wave 3 and 5 to travel 0.618 times wave 1. Remember, wave 1 can be the longest. The rule is that wave 3 just can't be the shortest. So as long as wave 5 is shorter than wave 3, then that's okay. All right, keep going on. Got a couple of other ones here. The most common relationship that we see in zigzags is equality, where wave A and wave C are equal. We often see that. If equality is not present, we look for other type of relationships. So you can see some examples there where we see these targets generated by these Fibonacci ratios there. In an expanded flat, expect wave C to be expand by 1.618 times the wave A, and wave B to be equal to around about 1.382 times wave A. So that's the expansion factor that goes on there. Similarly, we've talked about expansion using Fibonacci. We also do divisions there. When we're looking at the motive wave structure there, we can expect wave 4 typically to be 0.382. Again, it gives us that target on wave 5. If it's expanded, then you know 618 is the next one. So if we were doing trading here and we were going along and we had a target here, but the price continued on, well then our next target would be based on 618 is where we would be looking for that. Trading Elliott Wave, best waves to trade. I'm not so sure that I agree with the text on wave 3. 3 can be a difficult wave unless you're going into subwaves of 3. But definitely 5, A and C coming out of 5, again, are good waves to trade with. But of course, we always want to trade with a trend, like we keep talking about. If any of the rules are broken, you've got to step back and say, hang on, my count is wrong. Where am I in this structure? But the principle allows you to identify the trend, identify the counter trends, determine how mature a trend is. Where are we in? Are we up into wave 5 already? Then we may be getting towards the end of this trend. It provides clear price targets and provides specific points of invalidation to say, oops, I'm wrong, let's step back and go again. From a behavioural point of view, you know, we talk about market participants and behaviour because that's what drives so much of technical analysis. You know, again, in wave 1 is that accumulation phase. People are buying into the, you know, the bigger hedge funds are buying in. They've put a floor into the price. Wave 2 is usually the bears trying to beat it back down again. These are the people convinced it's going to go lower, you know, and they were just like, hang on, you know, the market's come back up. Great, I can sell for at least some sort of profit or, you know, reduced loss. So they're selling and pushing it all back down again, but it doesn't take out that floor. And then wave 3 starts, and then, you know, a lot more of the hedge funds, the RIAs, and are getting involved and pushing that price up as well. So you can read all of that there. So that's Elliott Wave. Very important that you are able to describe those elements. Remember, there's 8 waves in the basic Elliott structure, the ideal structure. You need to be able to differentiate between motive waves and corrective waves, the impulse, the diagonal as part of motive, the zigzag, the flat, the triangle as corrective. You need to understand those. You need to be able to identify the count in a structure. So you need to be able to look at these charts and understand all of those for the exam. So I hope that's been helpful, and of course we'll continue on next time. Thanks for watching.